G'day, Paul from Small Crown Productions here, and welcome to the Business of Art. On this channel, I dig into all of the things that we need to help us build a business around our creative work. So tips, tools, strategies, interviews, mindset, whatever I can do to help share knowledge from people who know what they're talking about so that we can do business better and make money from our creative work. So if that is something you are interested in, please consider subscribing. This video is one in a series of over 15 videos relating to tax and finance for creative people in Australia. So this is specific to Australia. It is also general advice. Always, always, always seek specific advice about your situation in your region or country where you are. What I did was ask my creative network for a question that they would love to ask a tax and finance specialist, and then I bundled them all up and took them to Matt Tucker, the principal of Creative Crunches here in Brisbane. Creative Crunches is an arts-focused accountancy firm. They know what they're talking about when it comes to Australian tax law, tax and finance for creative people. But again, general advice. Always seek specific advice to your situation. Matt was super generous to donate his time. I cannot thank him enough for taking the time out of his day to actually sit and answer these questions for us all. So with that, let's dive into today's question. Should artists be paid superannuation on contractor fees?
The best place to answer contractor and superannuation questions is to go to the ATO's contractor decision tool. If anyone just searches that in Google, ATO contractor decision tool, they'll be taken to it. This is a brilliant tool. We use it, we advise our clients to use it. In the background of that tool are all of these parameters against what the ATO has to say about employer-employee relationships, what they class as being valid independent contracting relationships, and what they also have to say about does superannuation support apply to this particular type of arrangement. And when a person goes through that tool, because the thing is, one contract may not be the same as another. It's very common for contracts to be all, many and varied, and we really would say to clients, this decision tool is one of your best friends, and you should be testing it all the time. What you'll find as well is that the more of a borderline case you happen to be, the more questions that tool will throw at you. Sometimes, if it's open and shut, you might only have to answer 3 or 4 questions to them and it'll be spitting out. And sometimes it is even that it is a contractor type of thing that's going on, but then the client will go through and start answering these questions and the ATO spits out, we think you're an employee. Now that opens up a completely different conversation with the person who's engaging the person, because it's really like, you really need to be having a deeper conversation with them as to why they're not putting you on payroll. Because if this comes push to shove, it's almost that business is, I guess, potentially exposing themselves to this sort of thing. So let's say the tool is confident that it's not an employer-employee relationship that's in place. You've answered enough questions that it says, yes, we think it's a valid independent contracting relationship as well. What that tool will do will throw up a question, would you like to also see whether or not superannuation support likely applies to this? You should just say yes, let's go. And there'll be a whole series of other questions that are more stemming from the superannuation legislation as to whether or not this particular contract in place would have super support. Now, what we're finding more and more in today's climate, now this is a shift that's been happening for probably a decade now, but sometimes these things move slowly, is that more and more people are being made aware that contracting is subject to superannuation. When I first was in the game 20 years ago, it was this common understanding that if you're an independent contractor, super is your problem. But the rules have actually never ever been like this. Not really, not in their depth. So it's almost as though it's been this sleeping giant for a long time, but now employers are much more aware of it. The taxpayers, freelancers are much more aware of it, and it's more open, which is great. In broad terms, when you've got a contracting relationship in place, the superannuation legislation makes super payable for employees, but the superannuation legislation has got a broader definition of what they call an employee than what than what we ordinarily think of as being an employee, and that is broad enough to encompass contractors, certain contractors. So the concept in the background is whether or not the contracting relationship is one which is wholly or substantially labour only. Now, what that means in terms of percentages is if reasonably a person could look at that contract and say more than 50% of this contract is attributable to the person's skills and labour and personal efforts, then it is what they call substantially. So substantially is not 80%, it's not 90, it's more than 50. That's 51 and above. So what they're trying to do there is separate those type of contracts where there is real significant plant and equipment that's involved in trying to deliver that contract. It's almost as though the quintessential sort of example is truck drivers. You need the driver, but you need the truck. One can't exist without the other. Now, that's a 50-50 thing. It's a shame that it's only a 51% test, but you really can't do one thing without the other. So some people need to sort of look at that objectively, but a lot of people, when they're contracting, they're not using plant and equipment to that type of extent, and it doesn't capture little things like computers or fancy bits of software. That's not enough. So just because it's you and your computer, if it's substantially labour only, then there's a really good chance, if not 100% chance, that it will be what they call a superannuable contract. But we would always tell clients, defer to the decision tool and answer all of the specific questions, because you're going to have a specific engagement in play here, and maybe there's a parameter that's just involved in it which is not substantially labour only, or you just never quite know until you've drilled in. But we would always encourage clients to sort of do that, because it's becoming more and more prevalent that more contracts are superannuable than not. Yeah. And especially for all of our clients in the arts and entertainment space, there's actually some really pointed parts of the superannuation legislation which mandates super to be paid for particular people operating in the space. So, this might be something that just goes up on the screen, but I'll read it so that it's correctly stated. A person who is paid to perform or present or to participate in the performance or presentation of any music, play, dance, entertainment, sport, display, or promotional activity, or any similar activity involving the exercise of intellectual, artistic, musical, physical, or other personal skills. It's pretty broad, and it's pretty specific to arts. Yeah. A person who is paid to provide services in connection with any of those activities just mentioned, which broadens it even more. Yeah. A person who is paid to perform services in or in connection with the making of any film, tape, or disc, or of any television or radio broadcast, which is also if not already ostensibly captured in that other provision, is quite specific to sort of the film and TV space. So particularly in our industry, this particular conversation is more live than I think it is, even is in other sectors. So I think we're in a position now where everyone is well aware that superannuation support is 99% of the time required. Yeah. And they just need to sort of have those open and honest discussions. I think the thing that happens is that it's a cutthroat industry, it's very competitive. Not all players play by those rules, and for the sole practitioners, getting that job is extremely important. Building the networks is extremely important. Yeah. They want to be called back. They want to get on the right foot, and it's that relationship dynamic, I think, which has caused it to have that lack of super support for such a long period of time. But our experience in this practice, having conversations with businesses that are in those risk categories, and for clients fighting for their rights, is that conversation is just starting to become so much more the norm. So I'd like to think that we're probably starting to see the back of that issue where everyone is getting, the support, or if they're confident enough to just raise that concern, they'll probably find the employer quickly changes their position and starts paying it.
There we go. Thanks again to Matt Tucker from Creative Crunches for taking the time to answer these questions. If you have a tax and finance question of your own that you would like to ask, please pop it in the comments below and I will do everything I can to get that answered, or link you to one of the other videos where it may already have been asked and answered. Also in the description below is a link to the playlist that contains all of these tax and finance questions, so you can dig through there and see if your question has already been answered. And of course, it would be fantastic if you could like this video, subscribe to the channel, but most importantly, if you got something of value out of this, there is a good chance you will know somebody else who can as well. Please share it with them, tag them in the comments, whatever you've got to do, pay it forward so that we can keep helping each other out. Thanks very much. I'll see you on the next one.